Hi everyone, welcome back. I'm Venus with the Vindiola Group brokered by eXp Realty, and today we're going to talk about... What, you didn't understand any of that? Well, of course you didn't. There are so many terms that realtors use and you have no idea what we're talking about half the time. So let's go over some of the most commonly used terms so you can have a clearer picture on what you need to know when buying or selling a home. Let's get into that right now. Thanks for joining me on this video, and while it's important where you live, it's even more important where you do life. If this is your first time to my channel and want to know all about where to do life in Denver, Colorado, then please make sure you tap that subscribe button and click that bell so you're notified each and every time we do a new video. You can also reach me at the number below directly for all of your real estate needs. We get calls, texts, emails from our viewers all the time looking to move within or into the Denver metro area, so don't hesitate to call, text, or email. However it is you want to reach out, we're here for you. Let's talk about the difference between pre-qualified and pre-approved. Back when I first started in real estate, pre-qualified was just a general term for somebody that had their credit pulled and just told the lender what their income was. And then the lender would go, pop, 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 yes, you're pre-qualified for this amount. You could still go online and do many of those very well-known popular online lending sites and get a pre-qualified letter. But what really matters is when you're pre-approved. So what does pre-approval mean? That means that you've given your lender your bank statements and your tax returns and your last couple pay stubs, and they know your entire financial picture. If you have any overtime, they've done a employment verification with your work to know what your overtime and your bonuses look like, and they create this big picture, this box of your financial status, and they say, okay, this is what you're pre-approved for now that we've done all of our homework. A lot of lenders will even go a little bit further and send you into underwriting. And what that means is that the underwriter takes a look at your entire file and you're pre-underwritten. What it means to be underwritten as it's another person that is looking at your financial picture within the loan and says, yes, you're final approved, or no, you cannot be approved for this reason or that. A lot of times you go through underwriting and you're approved with conditions. And what that means is you have to write a letter about this, or you have to prove something about that. And that's usually pretty easy. So once you're pre-approved and you go buy a house, you have to put some earnest money down. What is that? And what is the difference between earnest money and down payment? Well, earnest money is good faith money that says, okay, Mr. Seller, I want to buy your house. You're asking for this much in earnest money. I'm going to put this much down. It doesn't always go towards your down payment. You and your lender can decide where that money goes. But where does the earnest money go originally? Most of the time it gets held at the title company, but often there are some brokerages that will hold it in an escrow account in their real estate office. It doesn't get mixed with any of their other funds, and the money is very well protected. So what happens is when you go to closing, if it's not being already held at the title company, the brokerage company will send it to the title company so that whatever you and your lender decide to do with the money, the title company knows how to manage those funds. Sometimes, often, it goes towards your down payment. Down payment is the amount of money that you're putting down on the house, not to be confused with closing costs. Your down payment is either 3.5%, 3%, 5%, 10%, or more. Sometimes people think that you have to have 20% down payment to buy a home, and you don't. FHA is currently at 3.5% down. So let's just say you're buying a $500,000 house. What that is it's 5, 10, 15 plus 7,500. That's 22,500 down. That's why I sell houses and I'm not a lender. So what that looks like is you're putting 22,500 down on a $500,000 house on a 3.5%. There are conventional products that are only 3% down, and that's 15,000 down on a $500,000 house. That goes towards your mortgage. That takes off the price of the home. That closing costs are the fees associated with the lender and the title company, and if you're selling the realtor. Your closing costs are title insurance, appraisal fees, lender fees, those type of things. Closing costs are the fees associated with closing that loan. When you have the earnest money and your lender says, okay, well, let's put it on your down payment, it doesn't matter how you put it. Sometimes your down payment money is covered. Sometimes you're a VA loan and you don't have a down payment, so now the earnest money is going to go towards closing costs. Sometimes if you're a VA buyer, you get money back at closing, but only VA buyers can get money back at closing. So those are the differences. The earnest money can go towards down payment or closing costs. Down payment goes on your mortgage. Closing costs are the fees associated with closing your loan at both the title company and the lender company, and sometimes realtor fees. So you have the house, you put your earnest money down, now you have to have inspection. Inspection cost is one of the only things that are paid outside of closing and down payment. You have to pay the inspector and any inspections that you want to have done. Often right now buyers are waiving inspection, but what that means is they're saying, Mr. Seller, I'm still going to have an inspection because you should, you always should, but I will waive my right to object to anything up to this. A lot of times what we're advising our clients to do is say, okay, Mr. Seller, I want to buy your house. I'll waive my inspection as long as nothing over $1,000 to fix comes up on the inspection. These inspectors go through everything from the roof to the basement to the plugins to the windows. They will check everything. They'll make sure that the water is running and the water temperature is either not hot enough or too hot. They'll make sure the oven is working. They'll make sure all 4 burners on your stove is working. A good inspector will put a plug in all of your plugins to make sure that all of them are working and not reversed or not have any electrical issues. They'll run your sink and your dishwasher and your tub and your toilet at the same time to make sure your water pressure is good. They even will say that a light bulb needs to be fixed and that needs to have further investigation. They are not roofers. They are not structural engineers. What they can do, though, is say, hey, I think something is looking a little wrong on this roof. You should probably have a roofer come out. I always also recommend having a sewer scope. Sewer line can be anywhere from $3,000 to $15,000 or more to be replaced if there's a big issue. And radon is a big deal in Colorado. Radon is a gas that is emitted from the soils and settles in basements. And if it's over 4 picoliters, it is known to cause cancer. And so if you're living in your basement or spending a lot of time in your basement, a lot of people are really concerned with radon. Radon is a very easy and very reasonable fix. You can get a radon mitigation system anywhere from $800 to $1,200, and then within 30 days, the radon is moving out of your basement. So those are inspections and waiving inspection, what that looks like. Now let's talk about the big thing. The big thing we're talking about right now, appraisal and appraisal gap. What that means is an appraisal is a third-party person that your lender will hire to come in and give their opinion of value on the home. Now, an agent should come in and say, this is what I think the home is worth based upon their knowledge and their experience, but an appraiser is really the end-all. Sometimes the appraiser will go to the agent and say, hey, I'm having a hard time finding this value. Where did you get this information? And so the agents do have an opportunity to say, here's the information we gathered to get to our value. An agent cannot affect or sway an appraiser at all. It is their opinion of value. But now what agents are doing is they're telling their sellers or their buyers, hey, if you want to win this offer, you need to give an appraisal gap. What that is you're saying, okay, Mr. Seller, I know your home is listed for $450,000, but I'm going to offer $500,000, and no matter what it appraises for, I'm going to pay that in cash. Or, hey, Mr. Seller, I know your home is listed for $450,000. I'm going to pay $500,000, but I'm going to guarantee $10,000. So what that means is if it appraises for $490,000, you're still paying $500,000. But if it appraises for $475,000, you're now paying $485,000. Or if it appraises at $450,000, you're now paying $460,000. You're just saying, Mr. Seller, this is the amount of money I'm willing to insure on the purchase of this home to guarantee a purchase price. Right now, many sellers are getting full appraisal gaps with large ranges of difference between asking and purchase price. So with that comes in with the escalation clause. Often, buyers are saying, okay, Mr. Seller, I know that your home is listed for $450,000. I will offer $1,000 over every other offer you get, but I'm not willing to pay any more than $500,000. So now somebody gets an offer at $490,000 and you've guaranteed $1,000 over every other offer up to $500,000, you're going to pay $491,000. And you're giving an appraisal gap. So now you've used your escalation clause and your appraisal gap and you waived inspection to win this offer. A lot of times buyers are saying also, Mr. Seller, I will give you $1,000 over every other offer to this escalation clause not to exceed a certain amount, and I'll guarantee the entire appraisal gap. And they're going up quite a bit. So those are a lot of things to consider, and they all do wrap in this big bubble of how you're going to win offers right now. I will be coming out with a video later this week on how to win an offer in this market. So let's talk about contingencies. Essentially, every date in your contract is a contingency. You're contingent on getting through the inspection period. You're contingent on getting through the appraisal period. You're contingent upon finding insurance that you're super happy with and you're okay to pay for. But what we talk about mostly when we're talking about, are you contingent? Are you contingent on selling your home? And so do you have a home that has to sell because you can't get a loan until you do, or you need that money before you can buy? are you contingent on selling that home? And so you may think, gosh, why would I do that now? Or why would a seller accept my offer as a buyer if I have a home to sell? We always recommend that you have a buyer first before you exercise your right to go offer on any other home. And what that looks like right now is most buyers are giving sellers a post-closing occupancy agreement, or commonly known as rent back, up to 60 days after closing. So let's just say, okay, Mr. Seller, I'm going to give you $500,000 for your home. I'm waiving inspection unless anything comes in over $1,000. I am going to guarantee my entire purchase price. I'm contingent upon selling my house. I already have a buyer, but I'm going to let you stay in your home for 60 days. So you have a 30-day close typically for any loan, and then 60 days. If it goes past 60 days, if it's 61 days, you're now in a lease. And agents cannot help you with that. We cannot do a post-closing occupancy agreement past 60 days because now you're considered a lease in the state of Colorado. So if it's within 60 days, we can help you negotiate that. So now that seller has 90 days essentially to go find another home because now they have a buyer. Because you don't want to get a buyer until you don't want to go offer on a home until you have your buyer. You see how it all snowballs, and you need a really great agent to help you when the time is right. So we've talked about getting pre-approved, getting the home, getting an inspection, having an inspection waiver, doing an appraisal, having an appraisal gap, escalating to win, what are the closing costs, what are your down payment. I'm contingent, but gosh, I am also giving a rent back, but I need some protection. And what does that look like? What that looks like is a home warranty. So now you're saying, okay, Mr. Seller, I'm giving you all of this, but now I'm a little bit afraid of my own investment. I'm worried that the hot water heater is going to go out or the furnace is going to have an issue. I'm waiving my right to inspection up to $1,000 of anything that's happening right now. So often you're saying, okay, Mr. Seller, I'm okay waiving all of this, but will you please provide me with a home warranty? And what that says is this company is going to insure over some of these items. A lot of times sellers think if I provide a home warranty, something goes out, now I'm liable for that. That's not true. Once that sale is done, it's final, that seller moves on, and now you have a home warranty to protect you as a buyer. So let's just say your hot water heater starts dripping. You better take a look at that fast, because once a hot water heater's done, it's done. It's just going to go everywhere. And you notice that your hot water heater's dripping. So you say, okay, home warranty company, I've got a problem with my hot water heater. I'm going to pay you your trip fee. That's usually under $100, maybe $150. I need you to come out and look at my hot water heater. They're going to come look at your hot water heater and they're going to say, oh, this can't be fixed. They'll replace that for you. Or they'll say, oh, it's just this valve is loose. The valve needs to be replaced. I'm going to replace that valve for you. So you have some protection. What they don't cover is roof. A home warranty will cover most of your major systems. And if you're going to ask for a home warranty, I would definitely make sure that you ask for your air conditioner if you have one, your furnace and your water heater. They do cover all appliances as well, so if your fridge goes out, your stove, you're covered. And they do expire after 12 months typically, so you can keep extending that as well. So there you have it. All of the common terms that we're using in real estate, especially the ones right now that people are like, what is that? And if you have any other questions or you're thinking it's time to jump into the real estate market as a buyer or a seller, give me a call, send me a text, shoot me an email. I'm here for you. Until next time, see you then.